What's going on, guys? It's GBP baby. Welcome to another backtesting video. Today I'm just going to be running through CPI yesterday. We're going to be looking at Dixie, pound, euro as well, because they all deliver differently, of course. But yeah, we're going to get straight into things. Before we get down to the 1 minute charts, because we are going to be watching it on the 1 minute chart, here's the CPI delivery. This was at 8:30, obviously, on Tuesday the 12th of December, and you can see our price came down, running out all of these stops, and then ran up, running nicely into this liquidity void that we have here. And yeah, today we actually have FOMC, but that doesn't really matter as we're going to be focusing on this. So before we drop down to the low time frames, what I am going to do is I'm going to mark out this range from this open to this open, and I'm going to drag that out, and then we know that that is the volume. Actually, let's do it from here to here, and then we'll know that this is the volume, the liquidity void, because it is void of any trading on both sides. So let's just put that in like so. And yeah, let's drop down to the 1 minute and have a look. Oh yeah, also I do want to mark out the 50% level of this, because it's interesting how price traded right down into the consequent encroachment of this. Let me see, low 487. Yeah, so it was like 5 pipettes off, not trading into it here. 482. You see how close that consequent encroachment is, which is quite interesting. And if you go to the 4 hour, you can see we just trade into that range as a whole. So yeah, let's go down to the 1 minute and we'll look at that day. Look at how price performed. So obviously we have midnight, and from midnight price was moving lower, running right into London session, which starts at 2 a.m. So we can put 2 a.m. here, make that orange till 5 a.m. And now London, we actually had a nice retracement. Let me see, where's 5 a.m.? 5 a.m. is here. 3 o'clock, which is 8 a.m. in London. You can see that we have the classic reversal during the London session. So what happened? London opened, we came down, ran out these stops, and then you can see that we started to trade aggressively higher, running up and eventually tagging these highs. Wow, not even reaching these highs. Let's see, where did we reach to? We traded up into this fair value gap here before turning around again after London and then moving lower. Came up one more time to that same area before selling off and running lower. So the idea this whole time, this whole day, running into the New York session, the idea for retailers is that, okay, we're moving lower, So we can imagine that there's going to be people putting their buy stops above the volatile highs that were created during the London session, so we can draw that out now. We'll put buy side liquidity here, and then we'll put / relative equal highs. So it seems like London was used in order to create this idea that we are going to be moving lower. It creates the idea of resistance by failing to take out these swing highs multiple times, and then obviously moving lower and then consolidating into that 8:30 candle. One thing to also take note of, let's just mark out the start of the Asian range, which is 7 p.m. here. And the reason I'm going to mark this out is because it's very typical for price to take out both sides of the Asian range, especially in the London session. Now you'll see that because of how bearish we were at the start of the Tuesday, because of how bearish we were, London session didn't even trade back into the Asian range, because sometimes what you'll find is that London may trade into like up to the 50% level and then break lower, or it will completely run the highs of Asian range. But you can see, because of this bearish idea that London was seen to be creating, we failed to even trade up to that, and obviously created this idea of resistance and a push lower, which obviously is used to trick retail. What I'm also going to do is I'm going to drag this right the way through, and the reason I'm doing this is because I want to talk about the fact that we did actually take out the London range high as we traded higher. So now let's just look at how we delivered. Like I said, a lot of back and forth price action. So what can we call this? From here, from this high to this low, this is what pretty much just a consolidation. It's quite heavily consolidated. What I'm going to do actually is I'm going to try the high and low of the London session, because what you'll find is that each session tends to refer to the midpoint, the highs and the lows of each session. So you'll see how New York trades through the London session consolidation. So let's just draw out this high as well. And I'm also going to draw out the midpoint. And it's just interesting to see how delivery is made, especially on a big day like CPI. We're going to make this orange and we'll make this dash as this is the midpoint. So now what do we have on our screens? We have the high of the London session. We have the low of the London session. We have the low of the Asian range. We have the high of the Asian range. We also have the midpoint of the London session. And you can see our price consolidates, well, back and forth, a lot of gyrating before moving lower. And then we have the New York starting at 7 a.m. So we can draw a blue line there. 8:30 obviously is when CPI hits. So we can do that like so. We'll make that dashed. What I'm going to do is I'm going to make that thinner as well, because I don't really want it to block out this candle. And then we have the 10 a.m. which is the end of the New York session and the start of the London close. So we'll draw 12 o'clock, because during the London close it's typical for price to retrace, and we can see that's exactly what price was doing during that period. So that's something to take into account as well. So let's just get that marked out for us like so. And yeah, so you can see we have this consolidation. Again, relative equal lows, this low and this low. Price comes right down, running right to that 50% level of that consequent encroachment on the hourly, all the way back from over here. I'm guessing we traded into some kind of order block, right? So we traded into this breaker. Why is this a breaker? We have a low, we have a high, we have a lower low, and you can see how price breaks higher and eventually trades higher. So this candle is technically a breaker, and in all fairness, we haven't returned. It is typical for price once it leaves the range to return back to the breaker and then break higher, but that does not happen until obviously CPI. So little things like that are things that we should start to take note of. Like when we're looking for the low to be made for CPI, we should look for discrepancies like that could hint to us where CPI may be likely to get made. It seems like unrealistic to be able to call such a level, but you can see that breaker gets traded to right here and it is a 1 minute breaker as well, so it's not the easiest to locate, and Dixie isn't exactly the cleanest chart to be doing such a thing. So anyway, what are we looking at? So let me just drag out the London session lows and the London session highs and the London session midpoint. So as New York starts, you can see we start to move lower. We pull back at 7:30. After 7:30, I'm guessing. Yep, 7:30. We pull lower once, retrace. Where do we retrace to? Equilibrium of this range. So we have a range here. We come back up to 50%, come lower again, and you can see our price is constantly edging closer to that 8:30 a.m. time. When of course the candle hits, we drive higher first actually. Why do we drive higher first? Take out all these stops. So all the stops residing above this high, and everyone that's been going short during the New York session gets taken out with this swing here. We then move lower, so it tricks the retail into thinking, okay, we're going lower, so what are they going to be doing? They're going to be shorting again, where they've built this idea of relative equal highs residing even above these swing highs here. So there's buy side liquidity that's going to be building up there during this session. So let's just make that clear. And excuse my voice, it's that time of year where I'm getting ill, especially being in the UK. Excuse me. So you can see how this idea of resistance is being created again as well at the lows of the London session. We wick up, take out all these stops, creates the idea of resistance, drives lower, taps nicely into that breaker that we just identified, and then price reverses. Now, if we were to get in on this move, and let's say that we had an idea that price was going to go to this liquidity void, because when I was watching this CPI, I was aware of this liquidity void, and I did want to see price trade to it. So when I saw price move lower first, I was like, okay, this is probably the false move before the actual move up to the liquidity void, because the way that price gapped away on the Monday before, the fact that we gapped there on the Monday before the Tuesday CPI said to me that, okay, they're going to use this as some kind of reference point. So I did have an idea that price is going to return to this. So next time you see some kind of gap form before CPI, and it's at a level where you think, there's going to be a lot of liquidity residing, you can probably anticipate price is going to trade up there. It could have gone two ways, obviously. That's the thing with CPI. CPI could have wicked up to that liquidity void first and then reversed. However, we obviously came lower, tapped into that untapped breaker block right over here, and then obviously ran right up. But let's look at the delivery of it. So you can see we gap here once, gap twice, gap again. So there's a lot of, obviously it's going to be bullish and very volatile. And then you can see how we come back down into this fair value gap. So technically, this is a 2022 model for 2022 model of ICT. So like, this is a fair value gap. It is a liquidity void because there's no actual trading there, but this would have been an entry. And you can see our price fails to even reach down here. Another thing I noticed as well, have we traded to it yet? Yeah, we traded to it. So I'll talk about this, but technically there is a breaker here as well. So if we look at the last up candle before the down move, before we break higher, we have this nice green candle here. So this is a breaker, and you see, again, similar to what I was just explaining earlier, let's make this one blue. What you'll find is that price doesn't actually manage to pull down to it on the Tuesday. However, on the Wednesday, which is the day we're on now, and we do have FOMC soon, you can see that price just about misses it still again. So there's potential for price to want to run down there again. But what I'm saying is that when price leaves these levels untouched, it creates reason for price to potentially draw down there. So that's going to be interesting to see how FOMC and the rest of the week reacts to this level down here. But let's continue. So once we have this false move and we clearly have a rush higher, we can consider that this swing high, and technically it is a swing high. I don't really want to call it a swing high, but the fact that we close above it and then create the fair value gap makes this a ICT, a classic entry. Now, we shouldn't really be trading CPI, so I don't really want to say, oh, you should be trading CPI. But remember, we have this liquidity void up here that we've had our eyes set on for the entire day, and we've been moving down the entire day. So what do we anticipate is going to happen? All of these stops, all these people with their stops residing above all these highs, thinking that we're going lower, are likely going to get absolutely, get their faces ripped off, as ICT says. And that's exactly what happens. So let's just put we'll put a buy there. And to be honest, I would put my stop loss below this swing low. And then, obviously we aim for the liquidity void, but what I find interesting about this is the first time I've actually looked back on CPI today, is we trade to the top of the London high, where there's buy side liquidity. We then retrace back. Where do we retrace to? An order block. So we have a bullish order block there. And then we trade through the London high, trading into, remember these purple lines are the Asian range, We trade into that. Let me just mark out the 50% level of the Asian range as well, because I think we need to see that. So then we trade into the Asian range, pull back one more time, running out the stops resting below this low. And also trading into this fair value gap that we have here. And we're trading into this wick. What I'm also going to do is I'm going to mark out the consequent encroachment of this wick. Because another thing to take note of, there's a lot going on here, guys. I hope you guys are following along. So you'll see how the volume stays above the 50% level. To me, that is a signal that we are going to continue higher. So as soon as this candle closed and then we came down one more time into that fair value gap and closed like that, that would be enough for me to say, okay, we're likely going to continue higher, and you can see our price then propels. And that's because wicks are ranges too. So we've got to look at it like a fair value gap. And then when we do that, when we understand that price has pulled back another time into that gap, bearing in mind this is the top of the gap, remember this is the top of it, we can see that as a sensitive area. If it found support there, it's going to find support here. We came down, we broke higher, and you can then see price eventually does run up into that liquidity void just as anticipated. One thing to also take note of, although we've got the 8:30 candle, we also have the 9:30, which is when the equities open. So this move higher at 9:30, I was saying to myself during the CPI, I was like, okay, we're likely going, if we didn't reach the liquidity void during the between 8:30 and 9:30, then after 9:30 we are 100% going to reach it. And obviously use that time between 8:30 and 9:30 to get a lot of people out. Buyers got taken out, sellers got taken out, buyers again got taken out. And now you can see how we kind of just retraced into that London session. Very interesting. But yeah, let's just carry on doing classic backtesting action. Again, after we see this, after we take out these lows, knowing that we're at a discount. And what do I mean when I say that we're at a discount? Well, let's have a look at the entire range and have a look. So if we look at the entire range, there's a lot of things going on my screen right now, so I hope you guys are following along. Let me get a certain... So everything in the green is a premium and everything in the red is a discount. Now, why did I do it from this level down to here? Well, the liquidity void is our target. We anticipate price to come up to there. So that means when we look at the entire range from that high, I remember the low that we anticipate getting created has now been created. So now we can kind of frame a range. We've got a high and a low. So whatever price is offered in that discount area, and you can see how we tap down into that one more time here, we should be able to buy that. We are permitted to buy. Also, technically, we could look at this swing high as a breaker. Why? We have a swing low, we have a high, and then we have a lower low, and then we have a break higher. So this high anyway should act as sensitive, should act sensitively anyway. Furthermore, another thing, what happens when price trades through a 50% level? This is classic ICT concepts, but like when price trades through a 50% level and we get a retracement, when price trades through a 50% level, we anticipate some kind of run on stops. This fall here is not a run on stops. Why is it not a run on stops? Because it didn't take out any sell side liquidity. If this was going to be a run on stops, we would be seeing it reach below this low, but that never happened. We moved higher, and now we have a swing low created. So they kind of engineered this in, knowing that it'd create stops down there to do that classic run on stops that typically happens once we hit the 50% level of a range. So that's another reason why buying at this point would have been permitted. Now, obviously, it's easier said than done, but when you understand the logic, like I just explained it, hopefully that makes sense. So let's say we didn't want to buy as we came in. Let's say we wanted to wait for some kind of we wanted to know that we're going to break higher. Well, first of all, we gap here. Beautiful. I like to see gaps like that. Also, we create a nice fair value gap, offering another typical ICT model. Trades in. Where does it respect? 50%. So that would have been a buy as well. Oh, excuse me. And where are we anticipating to get taken? These highs. Why? We took out sell side liquidity, which was engineered. We're at the 50% level of the anticipated range. We've already took out all these sell stops. Remember, all that sell side liquidity has been grabbed during that CPI rush. So we anticipate a run up, and also we had our eyes set on that liquidity void. Let me get rid of this range. We've had our eyes set on that liquidity void, so all of these will come into account as to why I don't want to be buying at this point. And then you can see we run back through again. What we're running through, that same London range. This is why we should draw our ranges out, guys. Look how price treats it. It's using it as almost like a parameter. Premium, discount, premium, discount. We run higher. Beautiful. Respecting that liquidity void, closing it in nicely. Last one on stops. What does the last one do? It takes out that Asia high. Typical price action. Classic. And then you can see we break lower. Now, a retracement in The London close, which is from 10 a.m. till 12 a.m. is classic, so we obviously see that quite consolidated. I wouldn't really be trading that, so to speak. And then yeah, we've just run straight into the new day. Now, one thing to take note of, this is obviously the dollar, so we're gonna go take a look at how CPI delivered on the pairs that we'd be trading, because we wouldn't actually be trading dollar in this point, we'd just be watching it. But during my CPI, when I was watching, I did trade euro. I should have been trading GBP, and you'll see why. But at least you know now the whole pretense. We had a target that we wanted to see get traded to. We saw that that target failed to get traded to on the 8:30 candle. So what do we anticipate? We anticipate it to get ran to. We saw that it failed to get run to between 8:30 and 9:30, meaning that what? They're likely going to just be clearing stops, offering other entries basically for smart money. Another entry appears here, technically a breaker, also the low of the London range, and then price runs up, filling that liquidity void and retraces off since. So yeah, very interesting. Let's go on to euro. No, let's go on to GBP USD and see how price delivered over there. So here's GBP USD. Now GBP USD's day looks quite different to dollars in terms of, well, obviously it looks different, but I mean, like, it looks different as in it should be inverted, right? However, it's not. I don't think it is anyway. And I remember there was a point this week where pound was rallying and euro was literally falling quite heavily. So, and that's why I stayed away, because I was like, that is not right at all. But yeah, let's just draw out the range, Asian range again. Like so. Get rid of this, make that dashed. And then this is an example of what I mean by the Asian range, both sides of the Asian range being targeted for liquidity. So as we open, you can see we rally higher, taking out the Asian range higher straight away. We then pull back into the Asian range one more time. This is interesting. We fall aggressively here. Again, what we're doing, just running out classic stops. This is classic price action. Really nothing too crazy going on here. And remember, we wouldn't be trading this. So I'm not looking at this in terms of what we'd be trading, because we're looking at the CPI. So CPI shouldn't really be traded until after it's been released. We have this high, gets tagged one more time. We run lower. What happens at 3 a.m? Classic reversal. It's not a reversal. In this case, we just have a simple retracement back up to this bearish order block. Beautiful to see. And then you can see again 50% level. Typical. What happens? Break lower, run lower, consolidate, continue lower. What do we take out? Asian range lows, as I was talking about. We sweep those. Well, we purge them, so to speak, but we sweep them anyway. Break higher, run out this stop, buy stop, come back down, find support on this propulsion block. What do we expect? Propeller. Does it propel price? Yes. We move higher, run higher again, comes back down into this high. I am just running through this because this is just a London session, so again, I wouldn't really want to be involved in this. A lot of back and forth price action, and where we back and forth in this time. This time we're consolidating around this Asian range, aren't we? Which is interesting. And then we'll also mark out the London range, high and low, like so. And it does look like the high and low they have this. It does look like the midpoint remains the same, which is also quite interesting. So we'll just drag this midpoint out, knowing that it's London's midpoint as well. New York starts. We've already ran out these stops, and at 50% level as well. So we anticipate support to be found here. Run out buy starts, pull back, continue higher. We took relative equal highs. And also London's high. Remember, we anticipate the highs and lows of the sessions to be targeted. Is it targeted? Yes, it gets targeted. What happens at 8:30? We run right up through those highs. We also take out some relative equal highs residing over here and here, which is quite interesting. So London actually GBP actually took out swing highs, whereas the dollar failed to. But let me just find out what highs. Did that high get taken? I think this high got taken as well. Let's just get that. let me just go to a higher time frame real quick and see what's going on. So we took out, we had relatively good highs here, here, and even along here. So let's just run this straight through. Buy side liquidity, and we'll put it on the right because we're not going to be able to see it. So these are relatively equal highs. Lots of liquidity residing up there. So CPI grabs that. Look at the, but what's interesting is the volume. Look at where most of the volume remains. It still respects these levels here, you know. So although we've ran out all these stops to go to move lower, volume stays within, you know, the current range. So anyway, let's drop back down to the 1 minute. Scroll across. So as soon as that happens, we run lower. Where do we run to? Taking out all these stops that have accumulated during between 7 and 8:30. Grab those stops, run higher, and then we break down. Now, where would we want to enter on this? Well, this now offers us a potential for a breakaway gap. If price entered into that, we could sell into it, but a breakaway gap's always nice to see. Pound was the weaker pair that day, as I learned the hard way. But technically, we have a nice breaker here. Why? High, low, higher high, and then we obviously break lower. So if we anticipate this to be a breaker, that means on the way down, we could be selling into this level here. So let me just make this one another color. And you can see how once we close, what I like to see is I like to see this. So once we close below that low, and I know we have this massive wick, but in the context of this, once we close below that, I know that once we enter back into it, we can be selling. So that would be a selling point. And also, obviously, look at the way we respect that 50% level. Absolutely gorgeous. So now we have a breakaway gap. I'm going to list everything we have. We have a breakaway gap. We have a breaker. Or implied breaker anyway, at least. We also have an inversion gap, which is here. Let's just make that a light blue. So an inversion fair value gap, IFVG. And also dollar, what are we anticipating on dollar at this point? On dollar, remember, we had that volume imbalance on the buy side that we wanted to aim for. So we had all of that on our side. We also had the London lows to get targeted. So we could have sold right into this, took off partials at the London lows, which is gorgeous. But it's nice to see, obviously, it's CPI is crazy, but it's nice to see when prices go straight down, grabs these lows gorgeously, pulls back, and then continues. Where does it continue to? Again, London lows. So what you need to start doing is marking out these lows and highs and recognizing it as liquidity. Once it grabs those lows, we retrace. Now, when we have a big retracement like this, it's likely that we're at 50% of the range. And we can see that when we look at the range now. So if we look at the high to the low, what did I say on the when we were looking at dollar? At a midpoint, we anticipate a run on stops. Do we have a run on stops? Yes, here. And this fails to reach that high because we've already ran the stops here. So once those stops got grabbed, realistically, we don't really need to worry about price pulling back up there before we take out, before we fully take out what needs to be taken out, if that makes sense. I don't know if I'm making sense right now. But yeah, let's just go back. Let's just take this off and get back down to 1 minute and have a look. So we reached this point, grab that sell side, pull back. This is another entry as well. If we really wanted to be, cheeky with it, we could enter again here. Why? Because it's offering us a premium again. Remember, this is going to be everything above that 50% level is going to be premium. This is discount. We're aiming for these lows. Do we have any other lows that we're aiming for? Yeah, we have these lows down here. We have some relatively equal lows residing below here. Why are they relative? This low, this low, this low, this low. Are they relatively equal? Are they relatively equally low? Yes, they are. So we can mark that out as targets for sell side. So let's just make that sell side liquidity as well. We are coming up to we are coming up to half an hour on this video. So I am going to bring it to a close. But I do encourage everyone to go and do this kind of back testing yourself. So anyway, we run lower, pull back, respect that order block, another entry. Why? We've already ran the stops here, this level here. As soon as that got ran, we're pretty comfortable. This break here, break in market structure, if you've been watching my backtesting videos, I released a lot over the December. Break in market structure, classic, trade back into that, pull back. That's nice to see. We can allow price to trade up to this fair value gap. Doesn't have to, but it's nice to see. Again, where does volume? Again, you need to look at these things. Volume respects 50% level. Yes, we're wicking in. Wicks do the damage. Volume is where the price action's at. It respects 50% level, so we know that we're likely to move lower. This close below this low, beautiful. We have an implied fair value gap here, another entry. So there's all of these places that we could be selling into. So let me just mark out every place that I could sell. You could sell on this. Why? We have a rebalancing, because it's rebalancing with this candle here. That's what you call rebalancing there. This pullback as well into this bearish order block, and 50% level. Again, this is a significant level. Why? It's 50% level off the Asian range, and we've just traded below it and closed below it. So when price pulls back to it, we can anticipate, it to act as resistance. That's exactly what happens. Once we take out London lows, we anticipate some kind of run. Why? Because we just grabbed liquidity from the sell again. Price runs straight down into that other south side we found where there's relatively equal lows. Beautiful to see. And then from then on, running into the typical retracement that we like to see in the London close, when we just climb higher and eventually run out this swing high, which was obviously engineered to get taken. And again, it's a lot of back and forth price action, as in low, high, lower, low, high, but we still haven't taken out this high yet. Wow. We do in the new day, I believe. Have we even taken it out? Maybe not. There's relatively equal highs resting up there. That's interesting. But yeah, I hope this was insightful, guys. The reason I made this video was just because I wanted to take a look back at CPI, something that I don't really do often, so I thought, why not make it a backtesting video? If you'd like more of these, make sure to leave a comment. Don't forget to hit the subscribe button. Smash subscribe, please. And yeah, we're definitely going to keep going. That's going to be everything, guys, and I'll catch you in the next one. Peace.